Good morning, good afternoon, good evening, wherever you are, whenever you're watching this video. Welcome back to Avalanche Capital. It's your guy, it's your boy, Snow, and we're looking at a very interesting week ahead. Very interesting. So we're going to kick off on the financial calendar for the following week. This is NFP week. This is where price gets crazy. So on Monday, these are all red folder news, so I just filtered them out. But on Monday, we've got the manufacturing PMI, CPI month over month. It's going to be crazy. This is for the Swiss franc. But for the US dollar, we just have the manufacturing PMI numbers. And for the dollar again, we've got the ADP non-farm employment change. But the highlight of the week is this number right here. This is going to be crazy. This is going to be crazy. I think all the lack of volatility that has been happening in the market has been leading to this moment. So let's jump into the charts. So as usual, we're first taking a look at the dollar index, the DXY. We had a very interesting week. So this is the weekly chart. These are the weekly candles. So this was the week for the past week's price action. A lot of weeks in those sentences, but anyways, it's fine. So we took this high and we took this low. Nobody was safe. We took both the previous low and high of the previous week. Those both got taken out. We still closed below the open of the week. So this was basically a down close candle. It was a bearish week, but we didn't go anywhere. We're just moving in one place. We're just stagnating here. Took the liquidity here, maybe building up some more liquidity for the end of the week move, the NFP announcements and stuff. But we are looking at a very volatile market. Just look at these candles here, and then look at this. So we might be looking at a situation like this where we have a big move, price stagnates for a bit, then moves again. Big move, stagnation, big move. This was considerably more volatile than these. So going down to the daily, we can see that price opened, went down. We have a bearish bias. We are not steadfast on being bearish. If price shows us opportunities to go along, we'll go along. If price right now starts printing bullish signs, bullish signals, obviously we will change our bias to being bullish. But right now, as things stand, we don't really have a reason to be going long. We had the week opening, took the low, went and took the high, and then closed nearly at where we opened. The hell is that? What does that mean? It simply means that we are consolidating. This is a consolidation thingy. This is an entire consolidation. We are ranging. We are not going anywhere. If you play your cards wrong, you are going to cry. Price is going to show you that it's not here to play. Right, so going down to the 2 hourly, this is perhaps my favorite time frame. We can see what really happened during the week. Price opened, took these lows. We had marked these lows last week. I told you that these lows were going to get taken out. These lows were a very big liquidity target. But then look what happened. Like, actually look at what happened when these lows got taken. You see this? Price opened, consolidated in Asia, then dropped. We just dropped, took these lows, went right back up, took these highs. This high is above all of these highs. We took these highs and then dropped. Classic manipulation. Classic. We dropped, went back up, and then dropped. Nobody was safe. People had buy limits above here, gone. Sell limits, gone. You saw this price was coming down here, went back up to check your stop loss, because obviously when you put your stop loss, if you sell coming down here above this high, take that, then we continue going down. We come down, we take the low of this week, we take that, and then we go straight to the upside. We take the high, and then drop, continue dropping. Now this week, this is a template for the market maker sell model. This is a template for the market maker sell model coined by ICT. If you know your things, you know this. You know this. I caught this move down here. I caught this. But if you have any experience or knowledge in ICT, you would know that, okay, price did this, consolidated, came down here, consolidated here, went up, took liquidity, then dropped. We had this, then we dropped. Now we are coming down here because the ultimate target is these lows, these two lows, this low and this low. So you see, I mark them with an X. These lows are next. It's not 100% guarantee that we're going to take them, but they're most likely to get taken out. So we spend a lot of time on the dollar index because it dictates what we do and everything else. So just looking at this, we're just consolidating. Yes, there are opportunities to take trades, but it's not you taking a trade that gives you 1,000 pips or nothing. No, price is quick to turn around. If you took this by going up here, if you did not take your profits up, you're thinking that price is going to continue going up. It moved. It switched. I did not see the market make a sell model until price was here. When I took this shot. When I took this shot, I was like, oh, we are selling. We already have a bearish bias. So when we see things like these, a market make a sell model, we take it. Now going into gold. So this is a very interesting thing here. We had a bearish candle on the dollar. This was supposed to be bullish. These things are inversely correlated, but as we can see, this is bearish too. How interesting. Gold right now is supposed to be very bullish, but it's not. It's consolidating with the dollar. The dollar's not going anywhere. So even if you go down to the daily, you see that, okay, we have a little bit more detail here. We marked this one up last week. Price just dipped into it. You see this kind of right here, it just dipped into this and this one, and then went up. I assumed, I say that price is gonna come down into this and then go up. It did, but it came crashing right back into it. We don't have momentum to go to the upside. My bets on this week's NFP are that the dollar is just gonna drop. The bottom is just going to drop, because right now they've been holding price around here for a long time. It's been 2 weeks. Price is not doing anything. Coming down to my favorite time frame, we can see this. Nothing is happening. It's going sideways. Down, up, down, up, down. Most likely up again, then down, then up on NFP. I'm not saying you should buy gold on Friday, but just do your due diligence, and if the coins and the stars are aligning because it's gambling, buy. If you see a sell. I'm going to be buying. But if I see a setup for a sell, I'm going to sell it. But as price stands right now, we don't have a reason to buy. We don't have a reason to sell. We really don't. We really don't. On to the euro dollar, which is moving a bit more predictably. Well, not really predictable, but it's following the pattern. This was a bullish candle, opposite of the dollar. The dollar, the bearish weekly candle. This is a bullish candle. But then look at the body, small body. Price was just moving up, down, up, down, up and down. Why? We don't know. It's just doing it for the fun of it. But if we were to put logic into this, price came into this. This is this week's fair value gap left by these 3 weeks. 3 weeks as in WEEK, week, not week. You get what I'm saying? So this was the fair value gap. So price just came down into this fair value gap and then went right back up. But then still, it's consolidating. It's not really going anywhere. So these lines demarcate the weekly price action. So these are the 5 days, Monday through Friday. We just came down into it, just barely went through it. Didn't even close below the 50% and went up. Why? They're holding price. They're holding price right here so that you cannot do anything. You see this? Small body candles, small candles, big wicks, just moving up and down, making sure that price doesn't go anywhere. Going down to my favorite time frame. Look at this. Yes, you had opportunities to trade this. You could have traded this a lot of ways. You could have made a lot of money, but then price doesn't have a clear-cut direction where it's saying, okay, it's going up or it's going down. No, it's going sideways. How do you trade sideways? Supply and demand. It's very simple. Support and resistance. You see this? This gets to be a support, and this gets to be a resistance. This is how you trade this. You trade bounces off of these zones. That's the simplest way. That's the most effective way to trade this. Don't try to overcomplicate stuff. Going into the highlight of the week. This humbled me. This right here, this humbled me. So looking on the weekly time frame of US 100, you have this down candle, this big down candle. This is supposed to be bullish, by the way, but it's not. It's fine. It's okay. It's all right. I got humbled. Price just went through this fair value gap, filled it, and then closed right back up. But then go down to the daily. Straight bearish candles. Look at the momentum. So US 100 evidently has a lot more momentum than gold and the dollar. We have the week opening. Let's go down to the top. We have the week opening around here, slowly goes up, gets into this zone, and then just drops. It just drops off from there with momentum, by the way. Look at the size of these candles. Look at this. Price is moving. We had a lot of opportunities to get in. You could have gotten in here. Man, even here, we had a daily. All right, let's go back to the daily. We had this on here. This is a breaker block. With this breaker block, I wouldn't have gotten into this because I don't take trades based off of daily zones, unless if I'm buying for the long term or just trading for the long term in general. But you see, you could have gotten in here. If you like trading like that, you could have gotten in here. Stop loss here. Still, it paid. So the Quasimodo setup, it did pay. I just wasn't part of it. Because I still think the dollar needs to get weak. The dollar needs to drop. And if the dollar drops, all of these go up. So for the past 2 weeks, haven't really been making that much money. Just a few $100. Nothing too crazy. Simply because price is ranging. I cannot trade ranges efficiently. Keyword is efficiently. You need a market that's moving in one particular direction so that you can have a straight bias. You don't have a bias if the market is moving sideways. Trust me, you don't. So yes, that's it for this weekly analysis. I had to make it short because really there isn't that much to discuss. There isn't that much data to go through. So we're looking at next week. Next week we're looking at price possibly going down here. We've got this low and then we've got this low and this low. So maybe they might hold price around here until Friday where they just drop. Or they may just straight up go down on Tuesday, Wednesday, go up on Thursday, then drop on Friday. I'm looking for a very big bearish candle. But who knows? You must still check out this high. You really never know. Like, you just don't. So yeah, guys, have a good trading week and cheers.